All right, cool. We're good to go. All right, guys. So the Ichimoku cloud, or however it's properly pronounced. So it's just honestly, guys, it's just like a super like support and resistance type thing. Just look at it like that way. Look at it like a support and resistance. That's really all it is. Not going into it, the settings. God. So you have the Tenkin, I don't know, the Kijun, span A, span B, I can say that, and Chico, I don't know. So these all have a lot of stuff to them. There's all kinds of patterns, like when one passes another, one breaks another. There's all those patterns. Personally, for me, I found that there's always another indicator that does it a little bit better. So I've never really used those or anything like that. So I've kind of the only thing I ever used was the Kijun. It kind of works. Here, I'll throw it up. It kind of works as a secondary support and resistance line. And then span A and span B, those are just the two clouds that you see out there. So first thing to know, how to know. So it's kind of weird where to start. So I guess the first rule of thumb, if the candlesticks obviously are above the cloud, that's a bullish trend. And when they are below the cloud, that's a bearish trend. Let's go to SPX. Something in the chat. Okay, so yeah, when it's above, it's a bullish trend. When it's below, it's a bearish trend. And then the Kijun, it's the same type of thing. Just kind of look at it as like when it's above it, it's kind of like a secondary bullish, and then when it's below, it's bearish. So it can kind of help you because there's times like here where, if it's dipping into the cloud, you might want to know kind of where it might come up. And, this Kijun will act as support or resistance. So first things, like I said, this acts as a support and resistance line. So this bottom line, if the price is above it, it's going to be a support. So right here is what we're going to be looking at as your support line. And then right here is going to be your next resistance, okay? And so here's our support, here's the resistance. Once it breaks through that resistance, your resistance then becomes support. So now you have these two support lines. So now as you're coming up here, you're going, also as you break the Kijun, that's also a support and resistance line. So once it breaks that, you're now above those three support lines. So when you're coming down here to test, you know that in order to really have a change in trend, you're going to have to break the Kijun, the top of span A, and then the bottom of span A to really confirm it. So as you're coming here, you kind of break one, but it bounces off the other because these are two support lines. And what's nice is these aren't just kind of one solid line straight here, straight there. It does move with price pattern and trend. And so then once again, as it comes up here, the Kijun, I wouldn't really like hold that much weight to it, to be honest with you. It's the reason I even have it turned off. I think just normal moving averages work better, but it is kind of like a good secondary. So when you're looking at these trends, don't think necessarily, oh, just because it broke the Kijun here, it's instantly the whole trend is broken. I would wait for the overall cloud confirmation. And so then here you are, here it goes. And then once again, if you want to break total trend, you're going to have to bust through all the support lines. So you have to break through the Kijun, the top of span A, the top of span B. Now you think, okay, well, it broke below, so why wouldn't it start the downtrend like it does here? Well, there's another thing. You have to look at the cloud direction. So a bullish trend for the cloud is when you have typically the yellow cloud, and it'll be trending up. So it'll be going up like this. So when it's going up, then you know it's a bullish trend. So if it breaks down here, it's breaking down inside of a bullish trend still. And then the reason it breaks over here is because it's really weakened up. The cloud's gotten really thin, and you're actually in the red that's dropping down, which is a bearish trend because the red is going down. So that's why when it breaks here, it really goes into the big downtrend, as opposed to up here when it breaks, or even here. And I mean, when it does break here, this is actually a long time. I mean, these are day candles. So it does break here and it does go into a downtrend for a while. But the reason it really breaks here is because, once again, look how thin the cloud is, and you have the red span B trending down. Now, in back testing, like looking here, it's easy to say, okay, well, you can easily see that it was trending all the way up. So obviously it was going to come up, but that's hindsight. So luckily, the cloud does a little bit of work for us, which is nice. And that's that it actually tries to project a little bit into the future for you. So as we see here, it actually has all this data far beyond what's actually happened. So when you're here and you see like here, it's like coming, no, we'll just go to live. It's way easier. Never mind. Yeah, so when you're coming here, you see that this is starting to thin out. And typically when it thins out, you can see that it has the chance or the ability to turn into this cloud here. So while this might have looked like just a counter trend rally, according to the cloud, it's really thinning out and it's almost turning yellow. So what's interesting at play here is it might start looking like, oh, hey, even though this broke through, breaking through sometimes is just a counter trend. So then you know it's going to come back down. But here you can see it's really starting to thin out, like how it does at these points. And then it starts to open up like that. So what you're going to start seeing in the next couple of days potentially is this kind of pinching. Like it'll look like this. So it'll start to get really thin, and then it'll start to pinch. And then all of a sudden you'll see this start opening. And then that's how you're going to know, okay, that we actually might be starting to break into a trend. So even if we start, trending down or breaking down, it's not with a bearish bias. It's now with a slightly bullish bias. So you'd start looking at it as a dip buy. Now that hasn't, turn off your camera. Now that hasn't fully happened yet. It has not done that. And you can see are times where it can pinch like really tight and not always change. I mean, it does typically, but I mean, it can get pretty tight like here and not change. And then even, over here, it kind of looked like it was coming up and didn't change. And then over here, when this was live, you probably would think it might have changed, but it didn't. And so now for the cloud. Now, there's another thing when you want to look for when the trend is reversing. Now, actually, I'm going to take one step back. So back to kind of just to reiterate, support and resistance and how it works. So, once again, you're looking for big trends. The cloud isn't really a minute by minute thing. You can use it like that. You can. They have the 1 minute, and some days it does read really well. Some days it's choppy. But, you can get sometimes even on the 1 minute, you can get really good sentiment for the day. When it breaks under, it starts trending down, breaks above, it starts trending up. And, this is on the 1 minute where it's pretty choppy, and it's still, once this breaks down, it trends down for a while, breaks all the way through, it's up for a while, breaks all the way through, trends up. So even on the 1 minute, it's not bad. But to get really big trends, you can look at the higher time frames. Now, here, so here you see how it broke down really low. So it's breaking down, coming down. And then even though you have this pop, the reason that it might come down with a bearish bias is because when you look at how huge this gap is, it has to go up so much more still before it would have ever broke. So you can even see that live. It'll have that huge gap, because it projects a little bit further out. So you'll have that huge gap, and then, it comes dropping down. And then this time when it comes to test this same resistance area, this time it's breaking into the cloud. So now you're going to have a much more bullish of a bias, I would say, when you're going into here, when you're breaking into this part, simply because last time you had this huge deviation. Just like here, if there's going to be a dip, like this dip here, you aren't going to think it's going to be a huge trend change. Look how much it has to drop still before it even touches the cloud. So here you wouldn't have thought it was going to be a big trend change because there's so much before it has to get to the cloud. Here, when it's testing that same point, you do think it can have a huge trend change because now it's actually breaking into the cloud. And then this time when it breaks, and look, last time it broke to this level, it was sent down. But this time when it breaks this level, it trends up for a while. And that's what's nice about the cloud. It's going to help you with, when is it going to be coming up to that point and breaking down? Or when is it going to be coming up to that point and possibly trending for a little bit? So that's what it does here. And then once again, you're going to have, the support and resistance. You can even see here on this day, it's denied. And then the next day it battles it for a while. Third day, breaks through and then it's stuck here. And on the fourth day, it's kind of bouncing off of this as a really good support. And then it kind of just rides up. And then the idea of the Kijun is when you get the big deviations like this and it's not close to the cloud, even the big deviations out here, it's going to start acting as your guide when you're way out here. That's why some people find it useful. I personally like just plain old moving averages more. But that's the idea behind it, is when you get the big deviation, it's going to help you out there. And so as you're coming up, you break through there, and then, you're out here for a while. So you have the trend, and, it does end the day on the Kijun. Then when it breaks below, it stays below it. It has resistance there. The next day it does struggle there, and then it bounces off, uses that as support. So it does help you out here a little bit, but it's not really as strong as the cloud is, in my opinion. And then once again, here we come down, it breaks through, and then it bounces off this support really well. And then it really rides in the cloud. And you got to remember, the cloud is projecting this out in the future. So when it's touching the cloud like this, the candlesticks are actually touching it. Remember, these candlesticks aren't there. So when it's like this, it has all this yellow and these candlesticks aren't here. So it's telling you a few days in the future that it's going to it has the range to run up this high. And so when it does, you're being told that like in advance, and it's very convenient. And then, comes down, has its support, breaks through, kind of weak, but it does, hover right on that line for a couple days, and then it breaks through. And then when it finally breaks through, well, it has an open and a close kind of above it. It really does start trending down for a while here. And then once again, like I said, once you get the huge deviation or divergence, not deviation. Have I been saying deviation this whole time? I guess that kind of works, but divergence is what I meant a little bit more. So once you get the big divergence, then you see how the Kijun kind of does act as a little bit of a guide out here, acting as, resistance, kind of helping it go. And the Kijun's live. It's not like the cloud that's ahead. So keep that in mind. So it's not like this is telling you straight down ahead of time, not like the cloud does. And so here it goes, and it kind of helps you out here a little bit, not bad. And then once again, it came up to this level before, it dipped down to here, came up to here, huge divergence. So didn't really have a chance of breaking into a new trend. But this time when it came up to that same level, the exact same level, you can see here, this time it was testing the cloud. That's why, you had the trend change versus here. Here you got denied, huge divergence, but here testing the exact same level and is breaking through. So that's what kind of you can see in SPX. Now, we can try something live too, to kind of see it in action a little bit more. This might be a little bit choppy though, to be honest, just because it's only futures trading right now. There you go. So you kind of see how the cloud can kind of work. Oh no, it's closed. Never mind. It doesn't open up for an hour or 45 minutes. All right, so you can't see that quite live. I'll go to questions really quick in the chat room. Any questions, guys? I kind of just spat that all out at once. So if you need me to clarify anything, please let me know, and I'll be able to go right over it. Here, I'll go back to the old chart too. Uh-oh, someone drew some red lines. I don't like red lines. I mean dots. go away. There we go. Let me go back to the chart we were looking at that whole time. So yeah, here you go. Once again, you can kind of see how it works in the day. You know, coming up into today, you know, instantly when it opens, you know, well below the cloud, you're going to know that's going to have a lot. That might be tough for it to break through. So here it comes, coming up. All right, starts to bottom out, comes up here. But then when it comes up here, you see there's a huge divergence in the cloud. You know it's going to struggle to break through. It kind of does. It does have a little dip. But then, you know, the next time it comes up, it will, you know, it was kind of testing the cloud, busts through here in one candle, comes up, tests the cloud, and then goes off. That's also something I would want to point out. You know, sometimes you might get little head fakes on the 1 minute. So, dang it, David. I see a dot and I can't get over it. I got to erase it before I move on. Okay. So one thing on the 1 minute, since it is choppy, when it breaks through like this, just one candlestick sometimes, it doesn't necessarily mean a trend change. But when it kind of drops down and then bounces off, that's kind of your little small confirmation that, okay, it might not be a head fake. It might actually be running off. And so that's something to look for. And then, you know, kind of throughout the day, it kind of gets the overall trend pretty well. You know, it comes into here, battling in here. Once it breaks through, it's kind of sideways action for a while. Then, you know, breaks through and then it goes on its little run again. And then, you know, even on this dip, you would know to hold through because it doesn't break through the bottom and it just keeps going. Oh, a couple questions. Cool. Dankles is a good question. I actually am not sure, to be honest with you. I don't know if it has, I know it does have a little bit to do with the volume. Because, you know, when you get the sideways action, very, very typically, I mean, it's in there, the volume, very typically you'll start to have it turn to a red trend, a red cloud. And that's usually when the volume's drying up and stuff too. I know it also uses some moving averages in there as well. If you have like your moving averages pulled up, you'll see sometimes as well, like you'll even notice like, oh, wow, like there's some days like this line right here. I don't know if it is, but some days this line will be the exact 100 SMA line. So you can kind of see some similar calculations to moving averages as well used in it. Can you walk us through how you enter, exit? Yes. And then once like in the cloud, is it? Yeah. I mean, so it's all risk, man. It's all like your personal risk factor. So now in a perfect world, you would like how I'd enter, exit, and how to choose trend and stuff. You know, it's like I said, it's all in your risk factor. So in a perfect world, you're gonna buy here. This is where you're gonna buy on the day. You know, like you're gonna buy here, and then you're gonna sell all the way at the top here. That's what you did. Congrats. That's ideally what you did. But there's no tool really that's gonna show you how to do that. But what this does do is help you get big chunks of it. So, you know, the first time you can enter is if you want to be a little bit aggressive, is the first time it breaks into the cloud. That's the aggressive entry. So if you see it dipping here and you really want to get in and it breaks into the cloud for the first time, that's kind of your first, well, I guess breaking the key June is your first sign. And then, but then you can see up here, it gets kind of choppy with just the key June. Like those are a lot of false signals. But then it breaks through the cloud. So once it breaks through the cloud the first time, that could be an aggressive entry if you want for the trend reversal. But when it's bouncing around in the cloud, kind of look at it, honestly, like the 50-50 zone. Like it can really just float around in there for a while and then break up again or break down again. It's really not it's not like the most secure area to enter. It's kind of a gamble. I mean, there are times that you could enter it and, you can look ahead. You can look at, is the cloud trending up? Is it, there's certain times where, when it breaks in, it's also the cloud, you could see it changing color in the forecast that it has and stuff like that. So there are times you can enter it there. But for me, I like to go once it fully breaks through. So once it breaks through this top here, it'd break through, and then one candlestick I'm not quite sold. So I kind of like this retest right here. I love that. This is great when you're entering something. When it breaks through and then it comes up and it bounces off, I would enter in this candlestick here. Once it broke through here, it broke through the cloud, and then it used this resistance as a support line. That this candle entry, I guess you'd probably most likely enter at the top of the candle. It's just kind of how it works. So you'd probably enter in about here, and then you'd ride it with the cloud from here. And then what's nice is you instantly get this big divergence. The cloud is dropping, so your trend, even though you're coming down to this little bit here, the divergence is still really big, and you see the cloud changing. And like we know it, we can see it in the future, literally, when the cloud's changing. So we see that, and then it keeps running up, and then it keeps going. And then most likely, you'd be exiting up here, not all the way up the top up there. Because you come into this cloud, it'd be bouncing around, bouncing off your support, getting rejected at the resistance, and then breaking the support. You'd exit here. And then if you wanted to re-enter, then you'd play it the same exact way. So you'd be exiting here, and it'd be dropping, and then, break into the cloud, break up here. And then once what I said before, it comes down here, and even when it drops, it bounces off. So I'd probably be entering right up here, most likely, when it has that bounce off, and then there's that little divergence, probably be entering up here. And then you'd be writing out this secondary trend. And, in the daytime, like I was saying about the sideways action, it's when it turns red. Because, if you look, essentially, you're honestly entering and exiting, entering at the same time. That's what happens on the 1 minute sometimes. But it does save you from panic selling down here and, then just dumping it down here and then just watching it skyrocket. This lets you know, nope, it's trending back up. You can buy back in. So that's what's nice there. And like I said, this is just the 1 minute. It gets stronger and stronger with each trend. And then through here, even though it broke these, it didn't really break the bottom, so you can know to hold through. And this is risk tolerance, guys. Like, if you want to sell right when it breaks the cloud, you can do that. But it's not a full trend change until it really breaks through all of it. Up here, and then if you look here, and like I said, you got to remember, it projects the cloud out in the future. So you'll have the cloud running up like this when you're at this ticker. And so it told you that it was going to literally ride this line just like that before going off into that trend. So that's what's nice. And then, so here it is on the 1 minute. Here, let me go to something that's live so it'll try to do it out a little bit. It's really low volume, so it's going to be kind of choppy, but you'll get the idea. So see here, it's bouncing, before, if it might have been bottom bouncing. So on this bottom bounce, so here before it tested this exact point, and then, you'd be like, oh, there's huge divergence. I'm not going to long here. But this time around, you actually might have a little bit better of a chance because there's not as much divergence, and it's going to be bottom bouncing in a yellow cloud, not a red cloud. So that's something to look forward to. That's something to look for. And that's what you can kind of use the cloud to see. And geez, when did oil get to 36? Wow. Okay, hang on. Let me see if there's any more questions. But yeah, someone said keep the other stuff off. Yeah, honestly, this tool really is excellent just with the clouds. And then you use your moving averages that you have with it, and it is awesome. It's great. But it even looks cleaner. Look, it just looks nice when it's like this. It's just visually appealing to me. where am I pulling up the 1 minute chart? Just this little box up here has presets, and you hit customize list. And then when you hit customize list, sorry, I have a box in the way. You just hit edit, and then you could put in whatever you want. You can even do ticks and stuff. Some people like to use that. Cool. Nice. Any other questions? Anything you guys need clarified? And then obviously don't forget that you have other indicators too. So when you're wondering, is this going to break through here? Like this is I think I have my slow one on right now. Yeah, this is a really slow one for swing trades. But if you have like a MACD, sorry, I got cut off there. All right, so when you have the MACD and the stock RSI, when you're looking at whether it's testing a cloud or not, and you're unsure of whether you're going to have a bounce or whether it's going to break through, you can also use your other indicators and tools to help you figure out when it might bounce or break up. All right. So, for instance, here, when it's breaking into this cloud here, we can see a couple things actually. Two very bullish signs. So the first is we have the MACD is coming up and eventually trending above the zero line as it's in the cloud. So it's in the cloud, it's trending above the zero line, so we know that's a really bullish sign. And second, the stock RSI is really high up above the 80 line. A common misconception about the stock RSI is that when it's up above here, when it's oversold, that's instantly bearish. But that's not the case, actually. It's not bearish until it crosses below the 80 line. Because if you look, when it's above oversold, look at the run it makes. That's a huge run. It does most of its run is oversold. You can see this all over the place. See, here it is oversold here. It makes most of its run while being oversold. That's not bearish. It's not bearish until it crosses here below the 80, crosses below the 80. That's when it becomes bearish. I see that a lot in the chat room, a lot of that mixed up a lot. So I just want to clarify that really quick. So we have those two things are both trending very bullish right here. So that's going to let you know that you might have a positive break in the cloud. And then coming up here, it breaks down through the cloud. And honestly, this would be a tough one. I would think it's trending down. It's below the zero line, and this is pushing down really far oversold. And so it's completely at zero. So I would think this is breaking up. And then on this trend up here, once again, very mixed signals. I probably would not play this at all. This is dropped below the zero line, and this is above, the 80 line. This is above the zero line. When I have things that are mixed like that, I just don't play it. It's just not safe to me. So I would just ignore it. And this is on the 1 minute too, guys. So this is pretty choppy. So it's pretty cool how accurate this can be on the 1 minute. Something like the most choppy time frame, really. And then here it's obviously bearish. You have it trending below, huge divergence. This is pushed really far below oversold, and so it's coming down here. And then when it's testing up here. This is a tough one. This is a misfire, to be honest. There's no hiding that. Here it comes up here. Do you think it's going to break through? This is trending far above. This is really pushing up. So yeah, you might enter this one. And then here it would be a loss. That kind of just happens though. That's part of it. Nothing's 100% accurate. Let me zoom out a little bit. Oh, we're live. Okay. But then, as you go up into the higher time frames, you're going to get a lot better of a sense, because here on the higher time frame, I think this is the bump that we saw. Here on this higher time frame, you wouldn't have entered it. This break here is bullish, but this is far below. So you probably wouldn't have played it at all. It's only facing this first resistance. And that's just from going from the 1 minute to 5 minute. You instantly see that's really not that strong of a break. Excuse me. So like I said, when you move up in time frames, it's going to help with the choppiness a lot. So yeah, that's about all. That's all I wanted to really wrap up really quick with how to use a couple other indicators. And you guys know that I love these two indicators, always use them in the video. So I highly recommend the stock RSI K11D2. is what you want to change it to. And then for the MACD, you're going to want length 16, the slowing period 8, and the fast 2. So yeah, I highly recommend doing those. You can download the Surge one in our toolbar. It has the confirmation crosses here, which I really like, because sometimes it could kind of bounce around and get choppy, but they'll actually light up when you have the physical cross. And when it's live, the lines can just be touching sometimes. So it's nice to just be able to peek at it really quick and see the dots. So you just download that really quick if you wanted, and it comes with the settings too. It's in the day trading pin section. So yeah, guys, that's how you'd use these two tools to kind of help you when you're testing the cloud spots. And yeah, take care. Have a good one.